Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar is expected to hit more turbulence into the day ahead as we now continue to witness knee-jerk reactions since the start of the week, with all eyes turning to the RBA minutes and later also assessing what the RBA may be thinking when it looks to its new scheduled meeting, that is, on Thursday, in order to discuss policy measures to support the Australian economy through the coronavirus. From a technical standpoint, I still view the market down to 60 cents, which could extend towards a region of 59 down to 58 or possibly 56 in a broader picture. Any advances is wide due to the fact of these swings that we're getting and could see a rise up to around about 61, 65.85 with a cap from this downtrend holding around 62.45.90 on the wide. Very strange price action when it comes to the market's bulls and bears challenge, as we did see one round of tests to the downside which was rejected. Now, from the present view, the swings are getting bigger, and therefore due to the market volatility, it is expected to hold in a range of 110 to possibly just around 112 after briefly looking above there but this morning, but closed. I do feel that the swings will get very great to the market's volatility times in conditions of the market. From a technical picture though, you can see the RSI and the MACD is swaying to a negative view, hence why we're seeing a lot of bearish candles. So I do expect to see another round of tests to the upside foul and could see a move back to the 110 and reassess from there. The dollar yen still swinging in a range of 104 to 108.60.90 after the rejection there from earlier on Friday. From a technical picture though, do be on your guard. Although I don't really have a strong view at this point in time, the trading still remains at high risk due to the conditions of the market and still could see these very large swings coming into play. And so do be on your guard on this fact that the trading will be very, very difficult into this week. The pound slips further and now looks towards the challenge of 121 as the bears continue to weigh on the market. Could see the lows around 120 with any advances seeing resistance around 123.10 to 123.80. I still have little view on dollar CAD due to the fact that the oil sinking 10% last night does give concerns that we could see push to a higher range in above 140, but I would rather sit out and be neutral until we get some assessment and see a sharp turn in this market. After plummeting through supports, the market has found a level around 1,450.60 as a short-term base, as we can see back here, holding very well. From the recovery in New York does suggest that we may see a rise up to 1,525 or 1,535, with any weakness finding support in intraday around 92 or 1,480. And finishing up with oil, as I mentioned, it fell 10% last night. Now gives greater concern that we are pressuring the level of 27.40.70. A break beneath there would give further scope to $24.90 to $25 a barrel. Any advances, we've still got a lot of work to do on the upside, and we need to clear at this level around $35, with immediate resistance seen around 30.5. Well, that wraps it for today. Thank you very much for joining me. As always, grab the intraday report. Hope you enjoyed a great start to this new day.